890.
No, you have to take the difference between the two. So 3,100 is 4,200. That's the debits.
Right. So, 1,100.
3,110 is the credits, and so it's what?
189. Isn't it 1,190?
Is that right? 1090, right? Yeah. Okay, 1090. He can only give me one number. Now, the rest of these have only one number in them. You see that? OE only has one number, because I'm going to go back there and he's going to read them to me. Truck has 6,000. AP has 3,000. Gas expense has 100. Draw has 10, and revenue has 1,200 in it, right? But this one had a bunch in, right? So, now see how awkward that was? It was hard to, because we had to get all the debits and the credits. Okay, why don't I just give you a military command? Why don't I just say, foot the account? Foot.
Is that spelled F-U-T?
F-O-O-T-E. Foot. Now, that makes sense. And then I don't have to explain what I just did here. Okay, now if I say, foot, you just did it. 1090, right? You foot the count. Okay, now let's go back over here. And I say, now here you go, JC. Okay, foot. What's my debit?
You want the 4,200 or?
1090.
Oh, I'm following you because D is considered positive. In other words, I've got more money on the D side than the C side, so 1090 lands on the D side.
That's right.
It's always a positive number.
Yeah, you better be. If not, you're out of money. Right. It can be the other side. But you've got to figure out, when you foot the account, you've got to see which side's heavy.
Okay.
And so we put 1090 on the cash side right there, okay? What's OE?
It's going to be a credit of 3,000.
Credit of 3,000 OE. What is truck?
6,000 debit.
6,000 debit. What is AP?
3,000 credit.
3,000 credit. What is expense?
$100 debit.
100 here. Okay, what is revenue?
1,200 credit.
1,200 credit. What is drawing?
10 debit.
10 debit. Now, you got to add those up, and they better be what? Right? They better be in, say that word.
Balance.
What do you think this is called? A trial balance then? To see if they are in balance. Okay? Are they? 3, 6, 7,200, is that right? And what's this one over here? 6, 7, 8,
7,200.
7,200, right? There you go, Kyle. Welcome to trial balance. Welcome to trial balance. Now, we're on our way. Okay, we're now on our way. We now come to this table. Did you know that you are sitting now at the table, okay, where we prepare our adjusting entries? Okay, look in your mind map, the upper left-hand corner of the mind map.
The next one of those. Mind map.
Oh, yeah. Okay, what comes next? The adjusting entries, right? Okay, so in the cycle, we now get down to this fourth table right down here, and we go like this. We step back. Let's see, we step back, and we go like this. We go, oh, I forgot to do some stuff. I forgot to do my adjusting entries. Adjusting entries are stuff that you really didn't have a source document for, and you forgot about them. Adjusting entries is where the IRS is where we had that piece of chalk. It was 5 inches long, and we measured it and found out that it was down to 4. And we figured out that 1 inch had become the expense. But there are adjusting entries that you now do, okay? Now, on your mind map, I'm going to teach you in the next 15 weeks what the adjusting entries are. I'm not going to teach you tonight. But you're either going to have a debit as an expense or a credit as a revenue, mostly. Now, in the mind map, there are adjusting entries. Would you go through and count those right down below in the lower left-hand corner of your mind? What are the adjusting entries you're going to learn in here? How many are there? 14? There you go. 14. There are 14 adjusting entries that I'm going to teach you this semester of what things that you have forgot to do as you're coming down the table. As you're coming down the table, all right? Now, those adjusting entries can easily be learned. We could learn them tonight if I didn't want to get around as far around the table as I can. Do you know the names of 14 couples? Do you think if you really worked at it, 14 people, 7 people that are married, so 14 couples, Mr. and Mrs. Who? You can think of it, right? So if you can memorize the names of 14 couples, you can memorize the names of 14 adjusting entries because they're always together. They always show up. There's no variation. They're always together there. Okay? When I have supplies expense, its couple is supplies. Okay? When I have depreciation, what is its couple's name? What's the partner's name? Depreciation expense is what? Accumulated depreciation. You got it. All right, so I will now be telling you, and we don't do that until we get to chapter 4, what those adjusting entries are. But it's there. Now, once we do the adjusting entries, I can't just put them right here. I can't do that. I have got to stop, step back, walk all the way back here to Matt's table, and I have to enter it on Matt's table. You see the arrow on your mind map? You see the arrow on the mind map? Adjusting entries? Okay. It goes from trial balance number 1 to the adjustments. Do you see that? You're called trial balance number 1, all right? Trial balance number 1. We then do the adjustments. Once I do the adjustments, what's the language rule? Where does it go from the journal? It's got to go back to the ledger again, right? And what's the rule after you journalize? Okay, what's your rule? Post. Okay, yeah, we post. And then what have you got to do? Then you got to foot. And then we got to send it all the way down to this table, which becomes trial balance number 2. Because we've got trial balance number 1. So what is the difference between trial balance 1 and trial balance number 2? 14 couples. Right? In the book we come to 14 couples. Now, at that point, we take a deep breath, and we got to move down here. Can tell me your name? Again.
I go by Danielle, but my name's Gloria.
Gloria? But Danielle.
Yeah.
Oh, remind me. I got to write that down. Okay, Danielle. We're down at Danielle's table. Danielle's table. Now we are ready to prepare. We do that all year, guys. Okay, we go from JC. We go back and forth, and we don't do trial balance until the end of the year. Okay? We did Matt, JC, we did you 12 months out of the year, we're going back and forth, and we do those transactions. All right? If we keep it, and then at the very end of the year, we'll come down here and do our trial balance. And then we in the same day, we've got to run back, do adjusting entries, and come down and do our trial balance number 2. Now we are at December the 31st. December the 31st, and we come to Danielle's table, and now we have to prepare the statements. What are the statements? It summarizes that's all we did, guys, was those transactions in this whole year. It took us 1 whole year to buy a truck, 1 whole year to gas it up, and 1 whole year to haul 1 load of coal. Now we want to prepare the statement, because that's our goal in this class, is to prepare 3 formal statements. 4 statements. 4 formal statements. The first one at Daniel's table is called the income statement. Okay, so give me my Elmo here again, and it's going to call the income statement. The income statement, all right? You will see that in chapter 1. But when when you read chapter 1 now, I want you to remember where Danielle was sitting. Okay? Now that means you're going to have to sit here all the time. Jay,